be here with you today. Let me introduce Anthony Markham. He's been a family advisor to international families for over 30 years, assisting them with ensuring intergenerational wealth continuity. That includes looking at their tax position. He's a founder partner of Maitland, which is a global wealth services firm, and he's like me based in the Isle of Man, as the introduction mentioned, closest to international business centre to Newcastle, would be pleased to know. It's been lovely to come here. And as someone who is qualified in 2 jurisdictions, and he's qualified in South Africa and in the UK as a lawyer in both, he has seen the practice of tax planners develop as international transparency has increased and the global economy has taken off. Governments have discovered the delights of data mining. He studied philosophy at Oxford Balliol, and he really would like to continue being a philosopher, but I think commercial demands required otherwise. But that explains his interest in the topic today.
Well, good morning. I'm also delighted to be here. Dalila is not only my sparring partner in this debate, but also my wife has a special interest also in this topic. She qualified as an advocate in South Africa, where she was also a state prosecutor. She then qualified as, when she came to the Isle of Man, she qualified as an English solicitor and has practiced as a legal practitioner in the Isle of Man. And in that role, she did international tax planning like me. But recently she saw the writing on the wall and has changed gear in her career and become a compliance officer. I tell you, that's where the money is nowadays. Before we start, I'd like to emphasize that in this debate, the views expressed are not necessarily even the views of the protagonists. I am taking the role of the immoral tax planner, while Dalila has ethical concerns regarding my profession. So let's begin. I'm here today to confirm what you already know, that tax planners have duties and responsibilities to obey the law. As specialised in tax planning, it's their responsibility to understand the world's tax systems, and as responsible advisors to their clients, it's their duty to tell them both to comply and to do so as efficiently and effectively as possible. In doing so, they'll act legally, as a responsible global citizen, working to support individual freedom, to preserve wealth, those who should benefit. In doing so, they'll be productive and efficient members of society. They'll benefit many people through their career. They'll assist individuals and entities to comply with the law in many different jurisdictions. They will act with integrity, objectivity, competence, and professionalism. They will, accordingly, comply with your code of ethics. As the members of this esteemed profession, in my dotage, I will retire to some tropical island. I will tell my grandchildren, my great-grandchildren, when they visit, that I was a tax planner. And they'll look at me with admiring eyes and hope to follow in my steps as a practitioner of this noble profession. Now, the small fly in the ointment is that some critics suggest that some aspects of my profession are not ethical. How they could do so is a mystery. Responsible citizens obey the law and believe in the effectiveness of the rule of law as a mechanism to impose order on society, nationally and internationally. My hypothetical responsible citizens also believe in civil freedom, which includes the freedom of some to choose to pursue wealth while others choose other paths to fulfillment. Now, of course, some are born with advantages that others don't have. This can result in inequalities that can be unfair. And freedom itself is inherently constrained. Freedom of one can infringe the freedom of others. Freedoms interact. As a result, legislatures throughout the world have legislated as appropriate to level the playing field. For example, by imposing progressive taxes where appropriate to fund social programs, and establishing regulations that ensure the hubris of the bank in good times doesn't become a disaster for all of us in the bad, or hopefully. Decisions about the appropriate balance of these things are achieved through legislative action or international agreement. The correct balance is a matter of political debate. It's actually the responsibility of all who know about it to participate in that, to contribute it. It's our duty as citizens to observe the rules that are imposed, and it's my duty as a tax planning professional to guide others to prosperity, taking advantage of the freedoms open to them. People do complicated things. The rules are very complicated, and it's that complexity upon which the tax planning profession is based. And I submit, in relation to the profession of tax planning, there can be only one rule of right and wrong, and that's the rule of law. As tax planners, it's right to know the rules. It's ethical to respect those rules, and there can be no further appeal to a separate set of rules, a set that allegedly might tell us that some actions within the law are fair or unfair. To us, that we should first determine the law, and then determine whether what we do within the law is fair, is to impose an arbitrary and subjective set of rules over the legal rules, an idea which is contrary to the very notion of the rule of law itself, and is neither fair nor responsible.
Well, if Anthony is here to confirm what you already know, then I'm going to articulate what we instinctively feel. And that is that there are notions of right and wrong apart from what is written in the law. And these notions of morality permeate every aspect of our lives, the decisions we make about what we wear. So, you were dressed perfectly appropriately, the way your father dressed, Tom. Do we wear furs? Do we think that's morally correct? What about the things we eat? The sneakers we wear, the trainers we wear, if they're produced in sweatshops, is it right to wear them, to buy them, to support those industries? The deceits in our interpersonal relationships. Do we deceive our partners or do we not? Faithfulness. Should we introduce our children to tobacco when they are underage? Let them go on drinking bingers. These notions of morality permeate all our daily decisions. Some of us do it one way, others do it another way. Why should the moral dimension not attach also to our financial affairs? And that includes tax planning affairs. And of course, it affects not only our personal tax affairs, but also the advice we give to our clients. Perhaps it's the remoteness of the consequence that causes tax planners, who are otherwise upright members of the community, to ignore their moral responsibilities in the tax planning sphere. But surely it's no more justifiable to cause harm to individuals, countries, or systems by observing the letter of the law than by a criminal failure to observe it. So what I'm trying to say is that if you do or Google planning, set up your head off someone and send away the royalty payments and deduct it as tax, you're observing the letter of the law. But you may be doing harm, so is that morally justifiable? Well, society doesn't think so. Those Starbucks picketers that stood outside the coffee shops, those are social sanctions that are imposed by those who, well, firstly, legal sanctions are imposed by those who break the law, but social sanctions are imposed by those who observe the letter of the law, but act immorally or unethically. Society has a judgment on this and ostracizes moral outcasts, treats them with disdain, contempt, and rightly so. So, eventually legal actions follow. That is how the law seems to work. First, society has a view on things, and then law tries to reflect the public morality. The law catches up. There are lots of things which used to be legal, but immoral, and then became illegal. For example, slavery, apartheid, abuse of minorities, racial gender groups. These things became immoral before they became illegal. Leaders of moral thought and religious leaders led society in the right direction. Eventually, the legislature reacted. Today, nations, as Tom mentioned, have become interconnected as never before. The nature of doing commerce has changed. It's done in a different way. Intellectual property is designed one place. It could be anywhere in the world, and there's an element of choice as to where it is officially placed for the purposes of the written transaction. The World Wide Web is not just an electronic phenomenon. There are webs of interconnected transactions. global supply chains, intellectual property that can be developed, as I said, anywhere. In this world, the institutions evolve. The old tax rules have become outdated. They no longer meet the requirements of the new age. The old ideas of the double tax treaty network, which emphasizes the elimination of double taxation, the old idea of the right to banking privacy, where has it gone? That banking privacy included privacy from taxing authorities, the freedom of individuals to tuck their wealth away, not just under their mattresses, but in any country they pleased, except if the country happens to have exchange control. And the freedom of countries to freely undertake tax competition with one another, or regulate their own financial institutions. None of these old certainties are practical in today's world. The changes which are required are being led by the political and moral debate. The arguments are not just about fairness, but also about efficiency. Because money that is hidden, shall I say hidden, placed offshore, is not necessarily put to good use in the countries where it originates, or even internationally in poorer countries where it is required. Not only that, but the mentality of the game players itself has changed. Tax planners all seem so sure that they're acting legally today, but their own notion of what is legal has changed in their own professional lifetimes over the past decade or two. Who was concerned about international compliance before the all crimes money laundering laws came in? Notoriously, the offshore world didn't really concern itself about onshore compliance for many years. And was that so moral? Was it moral to say, oh, well, that's a UK law, it doesn't apply to us here in the BVI, or whatever. They had that unwritten feeling. What we must apply our minds to is that not just egregious tax planning, but true crimes. For example, piracy at sea, where ships are held by pirates, crews suffer, passengers even suffer for months on end, and it's kept rather quiet. These crimes happen because there is money in it for the perpetrators. Drug trafficking happens because there is money in it. Where is the money once it has been made by the criminals? Where does it get placed? And the secrecy, the claim to secrecy, the claims for the need for privacy of bank accounts, well, there is a suspicion that those claims are being used for to hide an illegal activity, such as the ones I have mentioned. So there may be a correlation between these claims that privacy is a right to which everyone is entitled, a right which I'm inclined to support. Yes, we do want our financial affairs to be private, but there are also nasty secrets in the world, and some of them involve real criminality. Now, I've read that tax avoidance deprives the developing world of 123 billion euros annually. That can't be just. The OECD estimates that developing countries lose 3 times more to tax payments as what they receive in tax aid they receive it in aid every year from the developed world. So I'd like to remind you of these headlines that we've seen, because I feel that they are important. They're not just headlines generated by pressure groups like Christian Aid or the Tax Justice Network, but also by opinion leaders like David Cameron, Margaret Hodge, we've heard about her already, and announcements made at the G8, G12 and OECD meetings. For example, it was Jimmy Carr's tax affairs morally wrong, that was by Cameron. NPower's £100 million tax dodge. MPs attacking Google, Amazon and Starbucks. Vodafone paying no corporation tax in Britain. Tax lost offshore could end world poverty, according to Oxfam. UK uncut protests over Starbucks' tax avoidance. France's Jean-Marc Ayrault slams the plight of the greedy rich. And this week, McDonald's, so the French headlines goes, transferred over 2.2 billion euros to Switzerland and Luxembourg since 2009 to dodge French taxes. by the way, the French issue is that, well, corporation tax in France is 33%, and in most other European countries it's about 20. So 33 versus 23. So I'm not surprised at the challenges that are being made. The Starbucks sales of £400 million in the UK over the year, which was the year before last, paid no corporation tax in the UK. They had to adjust it by making a voluntary payment. It did this by transferring some money to a Dutch sister company in royalty payments, buying coffee beans from Switzerland, and paying high interest rates to borrow from other parts of its business situated elsewhere. Amazon sales in the UK are £3.35 billion in 2011, paying tax on that amount of 1.8 million. So, Anthony, don't be too sure about the honour of the aggressive tax planner. Don't be sure that will endure until the great-grandchildren come around. As the tide goes out, the real truth will be revealed to all, and I fear that maybe those great-grandchildren might not visit at all.
Yeah. I'm glad Dalila mentioned those headlines, though, and Tom too. Headlines like those she quotes are a key part of the public debate and play a disproportionate role in forming public opinion. We taxpayers need to respond to those headlines and not allow them to pass unnoticed. But the answers, of course, are complicated and don't lend themselves to a neat soundbite. So it would be unfair for me to point out that Margaret Hodge, if she was here, is a shareholder of Stemcore, a company which her father founded, and that Stemcore only paid £157,000 into UK tax in 2011 on global revenues of 65 million, an effective tax rate of 0.25%. Indeed, some of Lady Hodge's comments are a good illustration of the way in which the tax avoidance debate has been hijacked by misconceptions. That's another headline. It was David Goldberg, QC, a friend of mine, who labelled the criticisms of Npower and Vodafone as shameful. Npower, like Vodafone, was criticised for not paying corporation tax when it legitimately claimed reliefs after investing billions in capital projects. Companies have done no more than apply the rules of the country, and to suggest otherwise is at best childish and at worst rabble-rousing. Society must make up its mind what it wants to do with its tax system. Of course it's to raise revenue. But don't they also use it to influence other forms of personal and corporate behaviour? So to permit accelerated deductions in respect of capital projects against current income, rather than against the income which eventually accrues to the project, is a strategy designed to encourage capital investment in the interests of all. Another good example, to permit non-domiciled people to continue to enjoy, and I do say continue to enjoy because we all want to have this benefit, the benefit of the remittance basis of taxation, is a strategy designed to encourage those individuals who could go anywhere to come to the UK and to benefit the UK economy by their presence. Oh, sorry, I want to see that slide. The UK government has signed up to the idea of a free international market as epitomised by the EU. They legitimately do so on belief, and the government's over the years obtained political consensus that we should be in the EU, even though it's still debated. They believe this overall benefits the UK more than protectionism. And I suppose the economic case is well established. The right to freedom of establishment is part of that concept. The ability to sell across frontiers is exactly what the EU was designed to encourage. Now, Amazon and Google, or as they call it, oh Google, it is after all Irish, is doing exactly that. They establish their businesses in Ireland or Luxembourg and are selling from those jurisdictions into the UK. Now, the truth is, the rules are so untidy, ad hoc, and confusing, more than 14,000 pages in the UK, I think, that even, and I haven't counted recently, that even the legislature loses track of what's going on. Politicians who are not tax specialists fail to understand even their own incentives that they've established. No wonder that specialists like you are required to read and apply the rules. To express surprise at the consequences of the very rules they created is rational, but to blame those who are following the rules is wrong. So why are these headlines appearing? Well, we're in time of austerity, and incentives given to encourage certain behaviours that the government are indeed government spending by another name. Is it legitimate at a political level? It is legitimate at a political level to ask whether this spending is spending that we, thus the British government, can, the British state can or must afford. The incentives which we talked about, the accelerated deductions, the incentives to non-resident people, have a price. But to criticise those who are behaving as required, as immoral, why is that right? Are these attacks another example of the politics of envy? It seems an easier target to attack foreign wealth held by non-voters, no matter how honestly it's been accumulated or what benefits to society may have been derived from, for example, the presence of those wealthy individuals in the UK, even as non-domiciled persons. Some of the headlines are driven by those who wish to change society, the legitimate objective, of course. Some of those that involve believe that collective and centralised decisions about application of resources are better than individual decisions, that the tax system should be even more regressive and that provide public wealth as opposed to private wealth is socially desirable. This is the classic debate between the right and the left, which in a sense I suppose was lost when the Soviet bloc failed and we had the triumph of capitalism. Now I happen to, in my assumed persona in this debate, to believe that legislators are not generally better at spending than individuals, and it's just as respectable and moral to take the higher position that higher taxes reduce overall wealth, reduce entrepreneurship, and the belief that while the states breed, that a nanny state breeds dependent citizens, less able to contribute to the common weal. And where a country introduces punitive taxes on high income, as France has done, the right to move elsewhere is an important freedom. So to vote with your feet, as move like Gérard Depardieu from France to Belgium, is a right which should be defended. Tax and regulatory competition, like other forms of competition, restrains governments from excess and creates a stronger international society, not a weaker one.
So, Anthony, if your argument is that the legislature has only itself to blame, it's got 14,000 pages of legislation and it's to be expected, and the reaction of companies like Google and Amazon is just there for through their own making. Well, the legislature itself does not speak with one voice on this. It thinks no. It's invented or passed the general anti-avoidance rule to catch this sort of egregious tax planning. Maybe not this sort of Amazon and Google, but matters which it feels are covered by the general anti-avoidance rule. And there is, the headlines are not necessarily misinformed. They might have been dramatized by the Public Accounts Committee, but they are not necessarily directed to a particular political agenda either. There may be a factor of this, of course, but the message that you are putting here today is not that it is shared by most Britons, not by the Britons that were boycotting Starbucks. There are grey areas. So a third of Britons currently boycott products of all services of companies that they think are not paying their fair share of tax. And 66% of respondents to a recent survey felt that tax avoidance is morally wrong and it's not correct to regard the legalities of tax planning or regulation and planning as completely clear-cut. Although legal theory suggests there is a rule of law and you just apply the rule, there's always a grey area. It's not always possible to determine what is legal and illegal. That's just aspirational. So, internationally, there is real political momentum to prevent base erosion and profit shifting, what is referred to as PACE, something which the tax planning profession loves to build into its plans. The global political movement that made automatic exchange of information, as envisaged by the US FATCA regulations, the international law, it will not stop with FATCA. Already, the overseas territories and crown dependencies, including the Isle of Man, have entered into automatic exchange of information treaties with the UK. And they'll start reporting under those treaties from the 30th of June this year. Politicians in the UK are seriously considering the possibility of compulsory, perhaps even public, beneficial owner registers. I'm not sure how much FATCA features in the lives of accountants represented by the examiners in this room, but FATCA is spreading, and it's now in the form of multilateral exchange of information agreements through various countries, South Africa being one of them with the UK. So privacy, secrecy is really a historic concept in the tax arena. Bearing this in mind, I'm afraid that this emphasis of privacy, which is in some cases a morally defensible personal right, does the profession of tax planners no credit in view of the suspicion that this privacy can be abused. And we've seen that by the headlines. So in the context of abuse of privacy, how can an honest practitioner complain if in the public and political mind the defensible concept of this moral tax planning becomes blurred by the association with illegal activity, illegal tax evasion? So the responsibility of a corporate giant like Google, which, as Tom said, can't really be boycotted, and it tracks the browsing history of its users, so it pays scant regard for the privacy of its clients. Should they? It doesn't sound right when they complain about the spotlight being on their tax planning. No, I don't think they can complain. So those companies have a social responsibility. They employ thousands of people in Britain, their sales are in Britain, but their taxes are not paid here. Is it right that they should pay a mere fraction of 1% in the UK because the transactions are formally executed in Ireland or some other place where it has a tenuous connection? So it is indeed proper and appropriate to condemn behaviour which is reprehensible. As Margaret Hodge said, there is a civic duty on all of us to contribute according to our means to the common good. In very practical ways, we all want a transport system that works. We all want the realm defended. Even if you can manage on your own and you think you don't need the support of the state, you'll find there are things that you do need from the state. So again, touching on the comment made by Tom, that how do you tell your builder or decorator that you should pay taxes and that maybe you should not take cash in hand at a reduced rate, and we close our eyes to what he does with the tax? Well, why does he need to pay tax? What does it benefit him? As you can tell from my accent, I'm from an African country. African countries are known for corruption. In the country I come from, so many things don't work. You can't send your children to a government school, really. You can, but if you can possibly afford it, you won't. You have to have private security at your gate because the police force isn't the best. So when you come to a country like the UK or the Isle of Man and things work, the police service is not corrupt. The schools function, they have teachers, they have classrooms that have stationery. Yes, you want to pay your taxes because you get something for it. So the political and social debate which has arisen as a result of the recent condemnation of egregious tax planning is a healthy and a constructive debate. The nation-state approach to the taxation of business, when businesses are not restricted to nation-states but have multinational supply chains with interests all over the world, this is illogical and outdated. It must be brought to the attention of policymakers, and the public are doing this. The idea of a multinational unitary tax system is intellectually attractive, but probably unlikely to succeed. A unitary tax system would involve initial disclosure by a multinational of its overall resulting profit from all jurisdictions, and then some fair way of allocating that profit between the different steps of the supply chain. The current system seems to depend upon the right of states to compete for taxes and the freedom of multinational companies to structure their affairs as they think fit. It seems unlikely to result in a fair allocation of taxable income. The other suggestion maybe for me from here was maybe a flat rate of tax on income. Easier said than done. So, however uncomfortable the attacks on the tax advising profession may be, they are calling on those who are otherwise unaccountable to account. And they are identifying genuine weaknesses in the legal, tax and regulatory systems of the world. They will inspire international cooperation in the interests of all. At a basic level, they would make us ponder whether the result of our intellectual work as tax planners is any different to the result achieved by someone who imports cigarettes illegally to avoid duties. Do we want to be in that same category? So I am pleased that David Cameron at last year's World Economic Forum in Davos said individuals and businesses must pay their fair share and companies need to wake up and smell the coffee. I see that was the front of your magazine last year, wake up and smell the coffee. Because the public who buy from them have had enough. And this year, the theme at Davos this week was changing the shape of the world. The need for this is borne out by a survey released by PricewaterhouseCoopers at Davos on Tuesday, showing that 75% of CEOs say that being seen as paying a fair share of their taxes is important to them. The great majority of CEOs around the world, the survey covered Europe, America, Asia, Africa, said it is important for companies to address shareholders' expectations by promoting ethical behaviour and ensuring the integrity of supply chains and improving diversity. So, the OECD has adopted an action plan to tackle base erosion and profit shifting, which is the problem, the tax planning structure used by Google, Amazon, and so on. It will result in changes in the way international business is undertaken. The US government has forced international cooperation by its unilateral imposition of FATCA compliance on all of us. These are seen to be as positive developments in the interests of fairness and rationality, and even in the interests of safety, because, as I mentioned earlier, crimes such as piracy at sea, drugs, people trafficking, these crimes exist because the perpetrators are able to hide the proceeds of their crimes, and usually ill-gotten gains are not taxed gains.
Thank you, Dalila. We've used this change of slide as an opportunity to change the focus of the debate a little, and this is because I'm a philosopher. In a sense, we've sketched out the main issues in the debate fairly clearly. We see that lawyers, and we are lawyers, firstly, I'm afraid, lawyers see the law as the standard, and everything else really is a political debate, a legitimate political debate, which should result in changes in the law. That we have sketched out. I want to take a philosophical moment in the debate. I'd like to focus the debate to see if I can identify a clear case of pure tax planning and see how immoral it feels to us all. In other words, let's put this to the real test. The planning, obviously, that I use as my example, must be manifestly illegal. It must have no purpose other than tax avoidance. And if we find an example of planning of that nature, we can exercise our ethical judgment, unclouded for the moment, by suggesting that planning might be illegal anyway. So the example I'd like to refer to this purpose is the example in the Mays case. That's a case of some very complicated planning. I won't take you through every step. If it was litigated, it was litigated, and it was found to be effective, and the tax benefit was achieved. The legislation which was in issue in Mays is very prescriptive and formulaic. It wasn't looking at the underlying commercial realities of legislation which Parliament put in place with sanction from the electorate. It instead concerns a set of rules you must follow to get a specified result. The rules are artificial, and they could give a result that was unfairly in favour of HMRC, or a result that was unfairly in favour of the taxpayer, as in this case. The rules don't look at commercial reality or motive, but instead impose a rigid mathematical process that binds both HMRC and the taxpayer. The Court of Appeal ruled that in such a case, things like motivation and commerciality are irrelevant. So, Dalila, what is your view of the Mays case?
Well, as you say, in the Mays case, the court was frustrated by its failure to be able to defeat this clever tax plan. The only object of the scheme utilised by Mr. Mays and others who used the scheme, the scheme was called SHIPS 2, was to minimise the income tax liabilities of the participants of the scheme as higher rate taxpayers. There would be high rate taxpayers, so it brought their liability down, and it also reduced their liabilities for capital gains tax. The transactions were structured in a 7-point program. I'm sorry. So the transactions were structured, as I said, in a 7-point program, and some of these steps were self-cancelling. And these steps led to the creation of deductible losses, including the payment of initial premiums for life annuity, for life assurance policies, and the payment of additional top-up premiums by a non-resident company, which was followed in less than 1 month by a partial surrender of the policies by that same company, thereby creating a potential for relief without triggering a charge to tax. And later this was followed by a full surrender of the policies by the individual investor. And in this case that was Mr. Mays. He then claimed that he was entitled to make deductions for tax reduction purposes. So I condemn this case as an immoral one. It was clever, but it's morally equivalent to the position of taking advantage of a mistake. For example, if Amazon should erroneously advertise products on its website, for example, iPads for £3.99 instead of £399, or something like that, is it moral to go in and buy as many of these as possible? In the same way, the state issues legislation which, by mistake, establishes a clearly unintended loophole. Is it moral to go and sign a scheme? You're a tax advisor, a tax planner for a client, to devise a scheme which is just taking advantage of that unintended loophole. Well, there are losers in both these examples, and those benefiting from the mistake have no moral right to take advantage of the weakness of others, whether the other is a multinational corporation like Amazon or the state. Indeed, I'm tempted to suggest that to take advantage of such weaknesses is to act a little bit like a benefit thief, a benefit cheat. But I do recognise that the benefit cheat has to lie to get his profit, while in your example you have positive no illegal action on behalf of the claimant before the court. The instinctive reaction of right-minded people is, and the court actually said this, is that the scheme should not be allowed, even if technically the scheme is within the law. In agreeing that this planning was successful, Judge Jay said, "My concurrence is reluctant. The higher rate taxpayers with large earnings or significant investment income who have taken advantage of this scheme have received benefits that can't possibly have been intended to accrue to them. And who pays for it? The ordinary taxpayer that doesn't participate in schemes like this is the one who'll foot the bill. Those who get their pay, their PAYE deducted from their package, from their salary until they even get it. So it must be for Parliament to consider the wider implications of this decision, because it relates to the way in which revenue legislation is structured and drafted. That is what the court said. The court said, we can't rewrite the law. The legislature has to do it. We have to simply apply it. We don't like this result. but our hands are tied. Another judge in the same case said that the result seemed wrong, because it bears no relation to commercial reality and results in a windfall tax for participants to the scheme. A windfall tax that Parliament can't have foreseen or intended. So the case is a good example of the category of transactions which constitute immoral tax planning and which responsible citizens should not resort to, despite the fact that the scheme was in accordance with the legislation. Schemes such as ships to are an embarrassment to the tax planning profession, and in the face of such schemes, even the most aggressive among us would surely agree that being legal doesn't mean it can't be wrong. Or at least the aggressive among us would perhaps make no comment on it, and perhaps not participate in the design of such schemes. A point will no doubt be made against me that the specific case was based upon drafting of a very specific kind, which had unintended consequences. Indeed, as Anthony said, the consequence could have gone the wrong way and been completely unfair. Not the wrong way, excuse me, the other way, and had an unintended consequence for HMRC, unfair to the taxpayer. It probably wouldn't have made the news then. The opportunity for immoral action was created by legislature, which accordingly must bear some of the responsibility when citizens take advantage of it. And I am aware that Anthony will raise the responsibility of professionals, such as yourselves, accountants and lawyers, to maximize shareholder value and to ensure that people fulfill their duties to their companies as directors. But more of that in Anthony's response.
Well, we're still dealing with pure tax. Slide. Let me note in passing, of course, this particular problem of the legislature has been addressed by the requirement for give notification of advanced application of tax planning scheme. But the argument which I was facing, the argument about the pure scheme, blurs again the distinction between the legal and illegal, and ignores that freedom of itself is an advantage that should not be denied. Even in the hardest cases, the efforts of the plan is to understand and operate within the limits of the law, test the limits of the law. And if they do nothing else, their actions inform the legislature regarding what they've actually said, and ensures that the quality of legislation over time is improved. It's my case that such actions are morally commendable, as many other free entrepreneurial actions which individuals take, in order to better themselves and by extension society as a whole. It's no more morally despicable to negotiate a good price or to establish a premium brand than it is to plan legally and effectively. And to return to the point I made earlier, of course tax needs to be paid, and of course it should be funded equitably. But it's the responsibility of the legislature to ensure this takes place, and it's not the responsibility of the individual conscience of the citizen. The citizen's responsibility, when he's being a citizen and not a voter, is to obey the law when it comes to taxation. He doesn't have a responsibility as a citizen, rather than the voter or as a member of the government, to determine the balance between taxation for different taxpayers, or a responsibility to assess somehow what a fair contribution should be, and then pay that. It's slightly off the point, but in my present persona, I'd be perfectly happy to argue the case that there is no moral superiority to spending and contributing to society by paying tax than by spending and contributing to society by individual spending. Individual spending tends to shape society in ways that suit individuals. State spending tends to shape society in a way that suits states. States have difficulty in tapping individual creativity and entrepreneurial flair. It's something which individuals have rather than states. Accordingly, turning to the next slide, I'm coming to the debate as a vigorous proponent of the rule of law. I believe that every citizen is obliged to know is entitled to know their legal position, and is morally and legally obliged to obey the law. I believe that laws that depend on administrative fiat or the individual opinions of those put in positions of responsibility by the state are bad laws. Laws which clearly signpost how citizens should behave are good laws. The debate about the morality of tax planning should more properly be seen as a debate about the length, complexity and poor draftsmanship of the worldwide tax codes. more that than a debate about individual actions. I believe the freedom of individuals does extend to the freedom of the collective entities which they establish. The freedom of movement of capital, the freedom of establishment in different environments, the freedom to move away from a country which imposes excessive taxes, or which is administratively inefficient, or perhaps corrupt, is an important freedom, which will tend in the long term to lead to efficient states which provide maximum benefit at minimum cost to the system. It will tend to drive out corruption. It will tend to reduce administrative complexity. These things are too expensive to be part of a modern, efficient and vibrant state. And let us not throw out the right to privacy in a frenzy of witch hunting. The right to privacy is not a right to commit crimes behind a veil of secrecy. The extent to which states are insisting on transparency is extraordinary, and transparency to tax authorities with a doubtful interest in the information supplied is not something I would wish to defend. However, the offshore business centres are leading examples of centres which promote transparency in responsible ways. There may be exceptions. There may still be secrecy jurisdictions in the world. I don't have much sympathy for the entities in onshore jurisdictions which continue to offend in the area, any more than offshore jurisdictions. In other words, if you want to go find a secrecy jurisdiction, you at the moment go to Delaware. Regardless of jurisdiction, structures and transactions should exist for economic reasons rather than the avoidance of taxes. And the need for international regulation is manifest. This applies particularly to aspects of the financial system which are international. Responsible regulation designed to prevent instability of financial systems or abusive behaviour to clients throughout the world is to be promoted and supported. But over-regulation, over-insistence on compliance, and unnecessary box-ticking are to be decried. It's no longer a force that reduces crime, increases financial stability, and protects consumers of financial services worldwide. It's instead correcting the system which imposes a substantial effective drag on the financial system. Balance is all. And finally, I would like to appeal to all state regulators, legislators, commentators to give law-abiding citizens the respect and honour they deserve. This vitally involves freedom. This vitally involves the right to regular feet. This is a freedom as morally and politically defensible as the right to the freedom of the person and freedom of the press.
Yes, and I submit to you that the debate about the morality of tax planning is a legitimate debate and that there is a substantial case to answer. It's a debate about fairness and balance, and a debate which will inform the political process and result in legislation which we find acceptable and which the public will find acceptable. It's a debate that is fueled by suspicion, which must have some substance, that parts of the tax planning industry facilitates illegal actions, and not just actions which, while legal, may be immoral, talking about the serious, hard crime. And when campaigning for legislative change, moral judgments about the actions of planners and advisors are permissible, because to an extent they participate. Tax planners cannot complain that the debate itself is illegitimate. We've got to participate in the debate and ensure that the perspective of the expert tax practitioner, including international practitioners, inform the process. We don't need to accept all the responsibility for the environment in which we operate, just as we don't expect that the interests we voice will have necessarily a decisive influence on the outcome, but at least put it in. And planners must take account of the existence of that debate, because it can have financial and reputational consequences for themselves and their clients. So, as a first point, to obey the law, that's always good advice. And it's also good advice to act in an honourable, transparent, and defensible way in all aspects of your life, including when giving tax advice.
And at this stage I acknowledge that tax planners cannot ignore and should take account of the debate. And according to Dalila and I devised some tests that we actually apply when undertaking planning for our clients in order to enable them to act prudently, if not morally, by taking into account the possible consequences of actions that may be regarded by others as of questionable morality. And also, we apply these tests to give our clients the opportunity, at least, to consider their own ethical positions. But this is where we're getting very much to the question of the movement, in fact, and the question of what is ethical to what is practical. Distinction was made to me by a member of the audience before this talk. I mean, the first test that we identified is a test that most people have heard of. It's the scrutiny test. When we're putting together a plan or a modus operandi for a company or a family or whatever it may be, which involves tax and other issues, we often ask whether the plan will withstand scrutiny. If the plan relies on non-disclosure or any likelihood that the scheme will not be reviewed, then the plan is unlikely to meet even the legality test, let alone be morally defensible. If the plan is legal, but if revealed will be judged harshly in the Sunday papers, then the plan would be of questionable morality. So take the very simplest example, to not reveal your cash earnings is neither legal nor moral.
And then there is the hypocrisy test. Sorry, the order is slightly wrong, but I'll talk to you about the hypocrisy test. Planning shouldn't be manifestly hypocritical. And by this we mean that we know it's wrong to devise a plan which appears to be taking advantage of, for example, an incentive to do a charitable deed, but it really has no charitable purpose in it. So it's not a term of art, it's a term which describes certain schemes which are undesirable and which would be difficult to defend in any public debate. So if a client claims that he's making charitable contributions and it's in a complicated tax structure, but actually no charity is really benefiting, then that's not something you really want to be involved in. So the schemes like this that I've seen are of doubtful legality, but even if they succeeded as legal devices, they would never be desirable. The legislature has granted incentives to encourage certain activities which are morally admirable, and to abuse these concessions, well, we know that that would be morally reprehensible. It's a bit like being a benefit cheat again. And these activities would get a degree of censure from the public, and that would carry its own consequences, social and financially, and could have these same consequences for the accountant who devises the scheme, if it's a hypocritical scheme.
The third test is the substance test, in the sense that's been articulated for us by the Tax Justice Network. Dalila was citing the plan in the Mays case as a plan without substance. There was no loss, but a loss was relief was manufactured. To claim that your profits are generated in Ireland when, if, and I'm not saying this is the case in any real case, but if in substance the sales are closed in England, or that your company carries on business in the British Virgin Islands, when in substance the transactions which generate the profits take place in another jurisdiction, is to undertake risky planning at least. Again, the real problem may be that planning is potentially illegal, but even if that's not the case, the lack of substance will be ridiculed if it's scrutinised. The substance over form tests utilised by the court to cut down on tax avoidance often go to the question of whether the transactions described have commercial substance. And to establish a plan that's not aligned with underlying commercial reality is to take a commercial risk, whether or not it's immoral.
So as a moral agent, rather than a tax planner, I would urge everybody to show proper respect for others, and that includes respect for people, animals, and environment, and to take these things into account in their own decisions. And those decisions don't stop once you're at your office desk. They do permeate your professional lives too. And I would defend my own personal right to have moral opinions, to have my own subjective opinions on matters of which I disapprove. This is all the more so when we get to morally controversial areas, such as corruption and international trades in arms, gambling, people trading, and pornography. These trades have been the subject of moral debate for many years. They are circumscribed by legal constraints, but there will always be controversy about whether or not those who quite legally become involved with them. I've been professional advisors, perhaps unwittingly, to these areas, are acting morally or not. So it's appropriate and proper in all aspects of life to expect individuals to take into account all these dimensions, not just legal considerations. The obligation does not stop at the office door when a client is willing to pay your fee. Accordingly, tax planners should expect their clients to take into account these moral and legal considerations in deciding whether they will or will not do something. They must make moral and legal judgments.
So while I believe it's no more my place to impose my personal moral code on my clients, just how they should spend their money, I also believe it is appropriate for tax planners to draw moral issues to the attention of clients. This is not just because infringement of the moral code could have reputational and financial costs attached to it, as indeed Starbucks found. Those costs, of course, must be taken into account. But also, clients need to be informed of the issues so they too can make informed judgments, taking into account the moral as well as the legal dimension. I'm also aware, when I give advice, that I have perhaps an obligation to advise my clients of tax planning possibilities. There was a recent case on that. It can be negligent not to draw certain possibilities to the attention of your client. But equally, if you're a director, for example, it is obvious on any consideration, maximisation of shareholder value is not the only value that directors are entitled to take into account. They don't have to minimise taxes, they can take into account the issues of other stakeholders, and that does include the issues of the benefits of some of their actions to wider society.
Well, that concludes our debate. We welcome any reaction you have on the subject before we break for lunch. I hope you've enjoyed it, and thank you very much for your time and giving us your attention.